What's up, everybody? It's Wednesday, December 22nd. Another good day up in the stock market. Like I said yesterday, I think the outlook right now is benign. By benign, I mean like basically a positive, supportive outlook, even if we have a slight deceleration in the flows. I want to talk about that for a second because somebody asked me a question, said, Mike, what do you mean by fiscal flows? Fiscal flows is the net spending by the government when you take daily withdrawals. Think of a checkbook, a withdrawal, you're spending money, you're writing a check, minus daily redemptions. We subtract the redemptions, and by the way, all this is in my Understanding the Daily Treasury Statement course for $99 that I have on my website. It's a video course. I would really encourage everybody to purchase that because it's going to be the best $99 you ever spent. That is a great resource. The daily, basically that's really the only thing I focus on, because those flows, they drive everything. I mean, you got billions, tens of billions, hundreds of billions moving in and out of the financial system every day with the government spending, and that pushes everything around, and that also sets the conditions for medium and long term. That's all based off of policy, you know, what Congress does in the fiscal. And it's, you know, when I was a floor trader on 4 different exchanges, I mean, we would do everything possible to try to get close to the big brokers who were executing orders in the pits, because when you knew what was on their books and when you knew when they were going to buy and sell, you could jump ahead of that and make money. So this is like the best insider trading you could ever have, but it's totally legal, it's free, it's a public resource that the Treasury puts out every single day. Anyway, the flows is the daily net spending, and I look at daily, I look at monthly, and of course I look at annual, but it's those daily flows of spending, that money that's flowing into the economy through government spending. It's all the spending minus the redemptions. Why do I take out the redemptions? Because that's not spending, that's just an asset swap. That's, you know, taking some treasuries away, putting and returning it with some cash, or vice versa, public debt issues. That is the opposite of that. So those are subtracted out. Anyway, it's explained in my course. So the flows have come down a little bit. We're looking at about a 490 billion monthly flow, which is still about 20% above the pre-pandemic level, which, as I've been saying, that's enough to keep the economy growing, like, you know, between a 2 to 3% growth rate. That's going to calm down all this inflation hysteria. The other thing I want to say about inflation is that, you know, I look at the banking numbers every week in the Fed's H8 release that comes out on Friday afternoons. And in the bank assets, loans, of course, and in the category of loans, you have commercial and industrial loans, all right? Now, commercial and industrial loans are primarily used by businesses to finance inventory. And during the pandemic, excuse me, we saw a big contraction in commercial and industrial loans. And it's easy to understand why. I mean, everything was shut down. So even if a business wanted to restock its inventory, okay, it wasn't able to because you couldn't get anything. The supply chains were shut down everywhere. So the business is not going to run to the bank and say, hey, I need a C&I loan because I need to finance some inventory. You just couldn't. It wasn't available. But now I'm starting to see a pickup in C&I loans. In fact, in the last 3 weeks, they're up almost 40 billion in the last 3 weeks. Now, they're still contracting year over year, but that differential in contraction is very small right now. It's been narrowing, and I think pretty soon will be up year over year. And I think that is a good sign. That's a positive sign that companies now are tapping their credit lines, going to the bank saying, hey, look, I need a loan to finance some inventory, which means that the shelves are going to be stocked. And if the shelves are going to be stocked, it's going to be a positive development for prices. In other words, it'll mitigate the price rises. Prices will start to stabilize. They won't be shooting up, and in some cases they'll be coming down again. So that is a positive thing. Speaking of prices coming down, today we had the EIA petroleum report. We had gasoline inventories up 5.5 million barrels. That was a big move up in gasoline inventories. And as I mentioned, we're starting to see in some spots around the country gasoline prices coming down. I said this, several weeks back. I had a guy here comment. He said, "Hey, Mike, if it's coming down, why aren't I seeing it at the pump?" I said, give it a little bit of time. I mean, the futures markets, in the cash market, it moves around a lot faster than what happens at your gas station and at the pump. But eventually prices will follow that. And I said, give it a little bit of time, and we're seeing that happen right now. All right. So I think the market looks good. And again, I'll just reiterate what I've been saying. Like, I really want to see what it looks like, what the flows look like when we get into January, because that's when we're going to see the impact of the cuts in the child tax credit payments. And again, even with that, I think we're still going to be okay. One thing I should mention today, Biden, he pushed back the moratorium on student loan debt payments. It's now May 1st. That was supposed to go into effect on February 1st, or I think the end of January or February 1st. That got pushed back to May 1st. So that's a little bit of relief there, at least until May, because I was a little bit concerned about that, because with the cuts in payments, the child tax credit payments, and then people having to pay student loans, that's going to, that would impact disposable income. It would impact household spending. But right now, I think things are looking good. The one thing I have to say, and it's kind of ominous, and frankly, I don't see a lot of coverage of this in the mainstream media. I see a lot of coverage of this in alternative media or, other news sites that are non-U.S. news sites. But this big tensions right now between Russia, NATO, and the United States. Russia has basically handed the U.S. an ultimatum saying, hey, look, if you move nuclear capable missiles into Ukraine, we're going to respond. And this thing could get really, really scary. I mean, for the Russians, this is like what we went through in the Cuban Missile Crisis when Russia was trying to move nuclear missiles to Cuba. This is a very, very serious situation, folks. I don't see the mainstream media here paying a lot of attention to it. This could be one of these events that could really spook the markets if we get some kind of a conflict going there between Russia and the United States, or Russia and NATO. I hope it doesn't come to this. I can never rule out how crazy they are in Washington and their belief that that it's just this just insane belief that they want to destroy Russia one way or another. But Putin has drawn the red line, and frankly, I could understand his position. When you got, nuclear capable missiles encircling you in Eastern Europe, in Romania, in Poland now, in the Balkans, you got U.S. Warships in the Baltic Sea, in the Black Sea, now the potential of missiles in Ukraine. I mean, Russia wants to protect its security. It wants to protect its sovereignty. I mean, just think about it. If Russia or China or Iran were putting nuclear missiles on the border of Mexico and Canada aimed at the United States, you think the United States would stand for that? I mean, I could totally understand Putin's position, but NATO now and the U.S. and Washington is brazen when it comes to this. They're crazy. They're going to get us all nuked. I'm telling you. It's a bad situation. So keep that in mind, because if something happens over there, you're going to see a very steep negative reaction in the market. The market's going to get spooked. So I'm watching this like a hawk, all the updates. It's tense. It's not a good situation, but I'm hoping that, cooler heads will prevail. Anyway, that's it for today, folks. Hey, listen, I just put up a new podcast episode. It's been a few weeks because I've been traveling, I've been away. But go check it out. I'll put the link right here in the description below. See everybody tomorrow. Bye.